your policy on your unit itself is going to cover the floor comp. So whether you have terracotta, you have wood, or you just have carpet, all that falls within your policy.
But if I don't have a policy,
then you're out of luck.
but assuming you have a claim within the policy limits, and it can get pretty expensive at 3% of $1 million home, that's $30,000 that the homeowner has to expect to pay out of their pocket.
100%. Before $1 is paid by the insurance, you need to meet the deductible. So they don't receive anything until they hit that $30,001.
My window is broken or leaks and my whole kitchen and living room is flooded. Is that my flood policy or is that my homeowner?
I'm Tom Morgan Jr. and welcome to Trial and Error. In this episode, I speak with my dad about the differences in insurance policies. In the past, we've talked a little bit about the difference in deductibles. I mean, most people are familiar with in an automobile having a deductible if they have to have their car repaired. There's usually some sort of a $500 or $1,000 deductible. That's the most common. In a homeowner policy, whether that's for your business or your personal residence or condominium, there generally is two different types of deductibles. So there's one that's generally for all losses. So somebody who has a fire or broken pipe or is damaged through some other aspect of the property, they generally have a flat deductible, just like an automobile policy would be. And that could be $1,200, $2,500, $5,000. And then what's most common in regards to policies that provide for wind or hail, which would be incorporating of hurricane deductible, is on a percentage. So when you have a hurricane or a tornado or some other wind event, those are generally a deductible, which is a percentage of what the overall policy value is that's being provided. So if you have $100,000 in coverage and you have a 2% policy deductible, you're paying $2,000 before your insurance kicks in.
Most people now aren't as old as I am, so they don't remember everything being a deductible from the claim. We grew up with auto claims, and in those policies, what you're saying is when it says there's a $500 deductible, that's $500 from whatever the claim is. So whatever your claim is, subtract $500. The remainder is the most the insurance company can pay. Contrary to a homeowner's policy, the deductible is a percentage of the amount of insurance coverage before you even calculate the amount of claim. So a $100,000 policy with a 3% deductible has a $3,000 deductible regardless of the value of the claim.
General rule would be yes, but there are methods in regards to the calculation of a claim. If you were to be exceeding what your policy actually provides for, you can actually eat up the deductible, and therefore you wouldn't come out of pocket.
Okay, but assuming you have a claim within the policy limits, I mean, it can get pretty expensive at 3% at $3,000. I mean, $1 million home, which we're seeing lots of and even greater, that's $30,000 that the homeowner has to expect to pay out of their pocket before they receive any remuneration from the insurance company on their claim.
100%. Before $1 is paid by the insurance, you need to meet the deductible. So they don't receive anything until they hit that $30,001.
Now that we know how the deductible, what are the different kinds of policies that we see on property? I mean, we have houses, we have condos, we have condo associations, we have commercial.
The policy for each type of structure is a different type of policy. So a residential standard home policy is going to be very different than the person who lives in a condominium versus the person who lives in a townhouse or owns a property within a homeowner association. They're going to have different coverages and the way that they're applied to the property.
Well, if I live in a condo, and I have a condo, my association has a big policy. I mean, the whole value of the building. Is that all I need? I mean, I pay a fortune, I pay a lot in premium, and it certainly is a hefty number that says the value of the building.
Right. So what happens and most people, if they own a condominium, they go and they get their own policy, and it says that this is, for your unit. That's what you're getting insurance for. Your master policy, which is what provides coverage for the structure of the condominium building, plus any common areas that falls under that master policy. And so the master policy, whatever your association has delegated as their deductible and so forth, is going to fall onto the owners having to cover, in addition to whatever deductible the unit owner may have within his own policy if his unit itself is actually damaged.
So this deductible we just talked about actually could apply twice in a condominium. Once because of the difference I have to make up with other condo owners for the master policy for structural damage, and then the difference that I have to make up because of the percentages for any inside damage to my unit personally.
We don't say you're paying double deductible. What we say is you're applying two different policies, and each policy has its own deductible. So if in a storm event, per se, you have damage to, let's say, your exterior windows, causing water to enter into your unit, the building itself has been damaged by the window. That generally falls within the master policy. The windows are same throughout the building. That's what the structure of the unit is. That's going to fall under the homeowner association's master policy. You then have, well, what about the water and wind damage in the inside of my unit? That's your own personal policy. And so you're going to be applying your deductible to that. So
in the same way we just talked about the deductible.
Correct.
Well, I mean, that's fancy lawyer talk, but I'm paying two deductibles and because I have to join with the other unit owners in the building to make up the shortfall because of the deductible on the building. And then I have nobody to help me out to make up the deductible for the damage to the interior of my own unit. Yeah, that's two deductibles.
You are getting applied to deductibles, but as the insurance company likes to say, it's what you bargained for. So it's about knowing the nuances of what's covered under each and understanding what you as the owner have a responsibility for versus what the association has.
Who tells all of these condo owners that this is the way it is, okay, before there's a big claim? I mean, who would figure this out?
Well, generally it's if the association has a property manager, they are usually very familiar with the ins and outs of the policies and how they get applied. And they should be providing some sort of informational instruction to the unit owners so that they understand what their responsibilities are in advance. You should be getting something when you purchase your unit that provides your basis for what the association takes responsibility for versus what each individual unit owner takes responsibility for.
In a condominium, where is the line drawn between, well, let's say there's damage to the building, there's damage, water comes in and damages the interior of my unit, and you know, I have expensive wallpaper that I put on, and I put on some special kind of wall covering in addition to that, and I put in, since I've lived there, I put down an expensive wood floor as opposed to the terracotta that was there 20 years ago when I moved in. Who pays what? In other words, a floor is a floor. You have to have a floor. So will the association, will that policy pay for my new wood floor that's in the unit and my wall coverings because they're on the wall? I mean, or who pays, I guess?
Well, the most basic understanding for it, and what is the most common principle, is your walls in. So basically from your concrete walls or whatever, if they're wood, walls within. So floor coverings, your wallpaper, your wood flooring, even your appliances, your any of the additional plumbing that you may have added that runs from the building's plumbing system into your unit generally falls within your policy. If it is not underneath the actual structure, which constitutes the basis for the building itself.
So even though the unit was built with, say, tile on the floor, and I've replaced that tile with a different tile or an upgraded tile, that tile is really not going to be covered because the tile sits on concrete. I have to have my own individual unit policy if that tile is damaged and I want to replace it.
So finishes, if you buy it as what the developer gave it to you, if they did it that manner, your policy on your unit itself is going to cover the floor coverage. So whether you have terracotta, you have wood, or you just have carpet, all that falls within your policy.
But if I don't have a policy,
Then you're out of luck.
then I don't have any coverage, even though when I bought it, it all came that way.
Correct.
Wow, that's certainly homeowners' property policies are certainly a lot different than what we deal with every day with a little fender bender for our automobile, isn't it?
A lot. I mean, most people have a basic understanding of if you have coverage for your vehicle being damaged, generally you take it to a body shop. It gets submitted to the insurance company and they approve certain aspects of your repairs. And usually they cover predominantly everything that will put the car back on the road.
Exactly. Oh, okay. So, all right. And how do the nuances of flood and hurricane and wind, how do they play in to these two kinds of policies or coverages that you've made reference to?
So what happens a lot of times is people, flood is a policy that is backed by the government. It's FEMA. In most cases, you can go ahead and buy a private policy that's over and above that in addition to some instances. But for the most part, people that come see us, they're coming to us with a standard flood policy. Most people are only getting that policy if they're in a flood zone. If they're in an area that's been allocated as being a requirement, that's pretty much the only time you're going to see people getting a flood policy coverage.
Well, if my window is broken or leaks and my whole kitchen and living room is flooded, is that my flood policy or is that my homeowners?
Well, we don't call that a flood. We like to incur that is wind-driven rain or wind rain that's come in through an opening in the property. A flood is water rising up from the ground. So sea level water basically coming up. So rising of a riverbank, right? Storm surge if you're along the beach or the coastline. Heavy rains where it causes the pooling of water to rise to the level that it enters into the home. That falls under flood.
Is this why the first level units are always cheaper than the second?
Well, I mean, it's listen, like Noah's Ark, it raises the boat and it floated away. So if the rain's coming in and flooding you outward, that's rainwater. So that's coming in through an opening, whether that's through wind created through a window or a roof, or if you just simply, a lot of people have, over time they get a leak in their home. That's going to be considered rainwater, or unfortunately, some people they have a broken pipe in their kitchen pools with water, and
right, that's a flood.
They love to call it a flood.
Yeah,
it's
that's
not.
Exactly. The first thing, my entire kitchen is flooded. That's not a flood.
Right. It's a term of art, but it's not technical. And those are the things that we try to work with our clients so that when they're giving a statement to their insurance company, they're not using the wrong terms to allocate what their damages are, because you use the word flood when you're reporting a hurricane claim and you're going to be denied right out of the gate.
That's what I would have called the kitchen problem when it flooded because of the broken pipe. But in reality, you have to think of it more as the river rising up and pouring into the house.
Correct.
Okay. So you're less likely to have the need for a flood policy the higher up you go in the building. If you get off the first floor, less likely the flood getting to the second.
Yeah. I mean, flood coverage is not something that's generally taken out by a condominium unit owners on any type of a raised building. It's generally, if there are units on the first floor and they're in a flood zone or area, that may be something they have. For instance, downtown Miami, the Brickell area is very, it floods very often, heavy rains or during a storm. So those buildings and their policies, they do take out flood coverage to cover their common areas, because most of them have their garages, their lobby, maybe even some of their community areas within the first or second floors. And so those areas are actually below sea level in some places, and so they're flood prone.
Okay, because in the Grove, the garages flood a lot because of the sublevel. The flood insurance, now, does that cover the damage to all of the property? Or do you have the same problem of the condo only covers the structure and you need another policy of flood if there's interior damage?
So flood works very unique to other policies. So number one is if you do have flood coverage, it doesn't necessarily incorporate that it's going to cover everything. The dynamics of what it has been set forth as in regards to coverage is very limited. So you may have extensive damage as a result of flood waters, but what you take into consideration is that a lot of people that have a basement, if they've built it out, which is very common,
Yeah.
they like to use the
Okay.
extra space. Basements are not allowed to be built out. So if you put the money into building out your basement to be a playroom or an additional bedroom, or I've seen individuals build it into working studios. Unfortunately, flood coverage, no matter what, will not cover those things. It will cover only the actual structure within that area of the basement because it's not been coded to be part of the living area. So flood is a very unique animal in regards to being a policy of coverage. And so it's very important that if you are affected by flood, that you're looking at the policy and you take an understanding of what it is.
Well, let's take the playroom example.
Right.
Okay, so I've built out, there's a nice pool table down there, and I've got a flat screen TV and a nice couple of lounge chairs, and unfortunately, because it's below normal ground level, the flood came and it came through the windows and seeped down, and I had 3 feet of water down there. It finally has drifted out and it's dried out, but everything down there is ruined. So if the flood insurance will only pay for the walls, can I use my other two policies for coverage for the tile that was on the floor and for the couches and the pool table and the TV?
Unfortunately not. So the other policies,
If they were upstairs, I could.
you're right. If they were upstairs, then they've been affected by the aspects of the wind damage to the property or to water blown in, they would be. But because once they go into that area that's been dedicated as being a flood area, you almost exclude it out. There's some instances where you can make an argument that it's been damaged both by the wind aspects of a storm as well as the flood aspects. But a lot of times, once it's been allocated as being damaged by one, it's not going to be covered by the other.
Wow. I don't think people realize how complicated all of this is. So let me throw in two other little things and ask you does this further complicate things? And that is whether it's a hurricane or a non-named storm or whether it's wind damage. How do any of those three things play in? And because the policies make reference to, hurricane coverage, non-hurricane coverage, wind damage.
Right. So the first thing we always say is you got to look at your policy. And so the fact is majority of policies have changed over the last few years to incorporate those all into one aspect of coverage, but they used to not be. And there are still some policies out there that separate where they'll treat a named storm, which is like a hurricane or a tropical storm, once it's provided a name, and let's say hail under one aspect of coverage, and a non-named storm as a standard peril. And so knowing the difference of that will have a factor in regards to what kind of coverage you're going to have, as well as what deductible gets applied to your loss. Because if you have a policy with a $5,000 deductible, but a 3% named peril or named wind deductible, that's a big difference in regards to how you're going to apply the coverage. So
who chooses how you want to apply the coverage?
Well, generally what happens is the National Weather, if they've allocated a name to a storm, then it falls within that aspect. It's going to be, from a certain period of time from when it was named until it expires.
I see. Okay.
And so that gets applied on a time period. So if you're affected and you're within that zone of being affected, you'll be quote unquote the named peril, versus where we've seen in the past, there's a hurricane that's coming through South Florida, but those heavy winds may cause tornadoes and so forth up in Central Florida. Central Florida is not within the cone of that named storm. So the tornado or the other events that take place up in Central Florida, which are sort of offshoots from the hurricane event, do not fall within the named perils. I say named peril, but named storm. So they get applied as a regular deductible versus the percentage deductible that is a hurricane deductible.
Well, okay. So maybe before we move on, I better ask you: is there any difference between a person who lives in a house versus the person who lives in the condo?
100%. I mean, because you're...
How complicated is this going to get?
Well, it gets very complicated
Okay.
because, again, it's the same thing goes for the person who lives in a mobile home. That kind of
I
policy
forgot
is
about
very
those
different.
people.
So you're in the condo. If you have a condo, then you're generally going to fall into certain reporting requirements with your association, right? And so you generally have the association making a claim, and then your claim is going to be to some degree supplemental to theirs on certain aspects of your damages, because if you've been affected within your unit, you have your own policy that you need to put your claim in, but you need to make your association aware if there's been damages that are quote unquote structural within your unit, because you can't make those repairs until those structural repairs are done. So in the instance where the window, let's say a window's been blown out or somewhat damaged, an individual unit owner is not going to go to the Ace Hardware and go get a window. The association is going to do that. And so how do you make the repairs around it?
Yeah,
or
I
inside?
can't repair my floor if that's under my
Right.
other
You're
policy.
gonna have the next rain.
Because the window's empty, and every time it rains, it's going to blow it.
Correct.
How does that differ from the person who owns their own home?
The person who owns their own home generally has full control of the home. And so they have an ability to directly control the manner in which the repairs are going to take place. So once you've reported your claim to the insurance company and you've gone through those steps, you're not relying on somebody else to be doing some, initial aspect of repairs before you take your next steps. If you have to board up your windows because they've been damaged, you can board those up, right? But in a condo association, you generally, again, are relying on the building property management company or somebody else to come out there and board up a window or whatever else. And may be that you're not even livable within your association because the elevators don't work or the general AC doesn't work or they don't have a generator.
Oh, these are complications. And somebody who lives in a mobile home, is that any significant difference?
So mobile homes generally have very limited coverages. And it's unfortunate a lot of times, a majority of people think of a mobile home as just sort of a larger RV that's parked somewhere.
Yeah. But a lot of them are actually anchored into the ground.
But a lot of them are actually
Sure.
anchored. You go to mobile home
Parks, yes.
and some of these are,
Oh, they're beautiful, some of them.
double wide,
Yeah.
and it's been built out and a lot of money's been invested. But generally, the insurance company is only going to provide a coverage up to a certain limit. And in those instances where people have built out, they're taking the risk that they're not going to have enough coverage to rebuild. They're taking that risk that hopefully the next storm will not affect them to the point of being a total loss.
All right. So that raises two quick questions that I have. One, does Morgan Law Group, do they handle all of these various and variety of claims, the types that you've made reference to, from the condo association to the unit inside the condo to the homeowner to the flood person to the damage to the mobile home?
Yeah, I mean that is exactly what we do. That is the reason why we are there to assist. We're trying to inform our clients as to understanding what their policy is, providing them assurances in regards to what additional coverages they have. The homeowner who's been damaged by a storm generally has debris that needs to be removed. Most policies provide some sort of coverage for that. You may have some structural damage to your home that requires repairs. You now need to bring up your home to code if it's an older home. Most policies provide some additional coverages for that. So reading through your policy, understanding what your full limits are, understanding how to apply them. And then once you get into individuals and their personal items within those homes or their condo, that's a whole different aspect of coverage that comes into play.
That kind of leads me to ask you two questions. One is the homeowner, be it condo or a house, and I'll use those semi-interchangeably. Clarified when there's a significant difference. What should that person do? I guess we'll call it preparation if there's an oncoming storm. And then if there is storm and they do have damage, how do they know whether they need an attorney or they can just call their insurance company?
So quick rules, preparation, very easy. I mean, you want to try and document your property in advance of a storm approaching.
What does that mean? Document
That
my deed?
No, documentation for me, the easiest thing to do is if you already don't have an inventory list of what's in your home, which majority of people don't, take your phone, walk through your house, take photographs of everything, just general aspects of your room to room, take photos, open your closet, take photos of your wardrobe, open your drawers, take photos of what's in there, take photos what's on the walls. If you have any type of an art piece, take a picture of it. It gives them a timestamp. It shows it's in the home. It shows what condition it was to some degree. And so if in the event you have some serious damage to your property or any of those items are somehow damaged, you at least have some sort of reference to it. If you're unfortunately severely affected by, say, a tornado and things are blown away and gone, how are you going to prove you ever had them? Having that photograph shows some documentation.
I was thinking, geez, just preserve the policy of insurance so it doesn't get all wet and the printing runs together. But I guess
Well, the next steps are clearly you should have your policy available to you so you know who to reach out to, because it's going to tell you who your agent is. It generally has the information who to contact. But you also want to know what kind of coverage you have. You should be looking at that well in advance of hurricane season, or when your go time to renew, you should be asking those questions with whoever your agent is. But the other things in preparation outside of taking the photographs and so forth, clearly is preparing your property. If you're in a home, doing the things that are necessary to put up storm shutters or boarding windows if you're an older home.
Let's assume there's no immediate storm coming next week. But if people have questions about their policy because they don't understand what all those boilerplate headings mean, can they call Morgan Law Group and get some at least reasonable explanation as to what they mean and whether or not the coverage that's on their policy is suitable for where they live or how they're living?
Yeah, we've always provided. The fact is that if people want to reach out to us and they just have questions, they're not sure what to do, we'll do a cursory review of their policy and kind of give them an overview of what it appears that they have as coverages and so forth. We always tell them, you should be talking to your agent. You should be asking these certain questions. We'll go through a list with them, inform them, these for where you live, depending on where they're calling from, this is the type of coverage you should have. We don't see it, or we see this, but we're not sure that you have enough coverage because of what you're telling to us your property looks like. A lot of times people have not done a reassessment or appraisal on their property in a number of years. And so the policy that they bought 10 years ago may still have the same coverages, even though prices have gone up, repair costs have gone up, the property value has gone up. And so if they are not seeing a proper agent to be assessing that on a regular basis, they may have a policy that keeps them very much underinsured. And then that, of course, goes into when we're assisting businesses, that's very common for people who buy investment properties and so forth. They generally are trying to keep their costs low and so forth. And so one of the things they do to keep their costs low is try to get the cheapest insurance. And so we commonly see over and over again, they've picked the higher deductible. They haven't done something to properly assess what their value is. And in commercial policies, many of the insurance companies provide a coinsurance penalty to them. So when it comes time to actually figure out what you have for coverage, you may have a lot less than even what your policy says, because if you're being penalized for being underinsured.
So it sounds to me that you can't always rely on your agent to provide the proper and all of the necessary insurance that you may need.
Depends on how involved your agent is with assessing your risks. And the fact is that some are out there and they will sit with you for a period of time and go through your property and ask for photos, or maybe even send somebody out there to do an assessment, take photographs. But a majority don't. And the majority are,
I've always found that they tell you this is what you need, and you say, well, okay, then that's what I'll get.
I find that a majority of people, they do it online. You plug in your zip code. You plug in how many bedrooms you have. Maybe it asks you the size of your property, but it looks it up online through some other service, and it has an estimated value, and they use that to work off of and basically create what they think is the necessity of your insurance.
So you cannot fully rely on either of those two aspects to provide the full adequate coverage that you may in fact need if you have a claim or a catastrophe that you're faced with.
No, I mean, what happens a lot of times is you have people who buy older homes. They do a full renovation on the interior. The exterior is essentially the same as what they bought it. There's nothing wrong with it, right? But they want to make a investment in either for something they're going to live in, or it's a rental. And they go to an agent and they say, I bought this property, and the agent looks up that property, and the agent's going off of the same valuation that it had before they did the upgrade. So unless you're telling them, hey, we just did this renovation, we just upgraded, to quartz counters, and we put in a new bathroom, and we've ripped out the old stall, and we put in standing showers or whatever, they're not going to know that, and they're not going to incorporate an additional value there.
So
for
it
you.
really isn't the agent doing anything wrong or intentionally trying to mislead, their prospective insured. It's just frequently they have a lack of information being provided to them, or everybody forgets to ask each other the right questions because they don't know what question to ask.
That generally is the more common, is that the person who is either a newer homeowner or has been in their home for so long that it really doesn't occur to them that they need to be asking the questions to their agent. And so if you're not asking, and again, if your agent is not the person who maybe is doing other things for you, they're going to sell you the standardized policy.
Well, I could see that being a problem. Okay, so this covers the vast majority of the types of coverage that we're going to find on property, correct?
Yeah, I mean, the other types of policies that come into play, of course, are when you get into businesses, because you have, if you own a restaurant.
Well, yeah, if I have damage, what do I do about the fact that it's closed down and I have income, and so
Right.
I can get coverage for that?
So there's business loss of business income, which comes into play. Most people who are running a service industry, such as a restaurant, generally have that built into their policies. It's very common. But if you're a non-standardized type of industry, you may not know to ask for that from your agent. A good instance of that is, let's say it's not as common now, but the old courier service, they used to be around. So, they would do the 1-day delivery of packages, mail, so forth. Well, if you have a hurricane and all these businesses are shut down and you're shut down because nobody can get to you to pick up packages and so forth, you may have an instance there where you're out of business for 2, 3, 4 weeks while things are getting put back into place. And so if you have loss of business income, you may have ability there to say, we're out of business. It was a result of a covered peril.
Well, that would apply to like a uniform service.
Correct.
If the businesses that need the uniforms are shut down because they have damage, the uniform service has nobody to service uniforms to, but yet their premises may have experienced no damage at all. So how do you make a claim when you're sitting and all of your presses and your washing machines and your steamers, everything is working just fine, and all of your employees can get down there to pick up and deliver all the uniforms, but nobody needs any uniforms cleaned because nobody's working?
Yeah. So you just threw out the Pandora's box, because unfortunately, most policies indicate that the actual business needs to be affected directly by the storm.
So my uniform store has to have damage, otherwise I can't make a claim, or usually can't?
Correct. And so that was a very common thing. So during COVID, these restaurants that were shut down, hotels that were closed or had no capacity because people weren't traveling, they were all trying to put in loss of business income. But the reality was, in that instance, they said COVID wasn't necessarily damaging your property, and COVID wasn't doing something to affect your ability to work. It just, nobody wanted your services. There was nobody using you. So there was no coverage.
So this is sort of a ass backwards use of what we called in personal injury, the impact doctrine. No matter what kind of damages you had, if they didn't actually touch and impact you, you couldn't recover. You could see things and things could emotionally affect you, but it was a problem to recover. That has changed to some degree over the last few years, but I can see that in property, that doctrine seems to still be there to some extent.
To some extent. So years ago, we had a issue where we were representing, a produce wholesale supplier. They were not affected by the storm, but their clients were. And so number one, they had no one to sell anything to, but they also had a huge warehouse of produce that was being lost. So we couldn't make a claim for loss of income due to the events of the hurricane. Luckily for them, they had gone and gotten a different policy which covered the aspects of spoliation on their produce. So they're able to get some aspect of a recovery for the loss of the product, but clearly it doesn't cover what their profits would have been, doesn't cover their overhead in regards to still paying people to show up and manage things that are going on. And it's a problem.